Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal. It's the 29th of November 2023 and here are the questions we will be answering today. Are crypto exchanges proving skeptics right? What is the importance of being Hardik Pandya? Is it time to sell passenger vehicle stocks? And what are crypto exchanges and how do they work? Exactly a year after FTX's collapse, another pillar of the crypto sector is shaking. While the FTX's Sam Bankman-Fried is behind bars, former Binance chief Changpeng Zhao has pleaded guilty to violating US anti-money laundering laws. So, as the Binance conundrum unfolds, it has once again trained the spotlight on concerns around safety and credibility of global exchanges. Tariq Ahmed has more on it.
The US Securities and Exchange Commission, or SEC, has filed a lawsuit against world's biggest crypto exchange, Binance, and its founder, Changpeng Zhao. Zhao has stepped down from the CEO's position after pleading guilty for breaking the US anti-money laundering laws. He has agreed to pay a $4 billion fine to the US Department of Justice and other agencies. The SEC alleged that Binance lied to the regulators and had put customers and investors at risk. The SEC also claimed that Binance and its founder had the freedom to divert customer assets as they pleased to other businesses owned by Zhao, which engaged in manipulative trading to artificially inflate Binance's trading volume. Also, Binance has been facing legal and regulatory challenges in countries like the UK, Japan, Germany, and Singapore. These setbacks came when the crypto market had been recovering after the fall of another cryptocurrency exchange, FTX, in November last year, which was founded by Sam Bankman-Fried. Bankman is now charged with fraud for obliterating billions of dollars of customer funds, and the FTX has collapsed into bankruptcy. Being the major player, Binance's problems are expected to have a significant impact on the crypto industry. So, are these events signaling that the crypto skeptics are right?
Probably in India, because of the regulators' caution, its excitement is much muted about crypto, on crypto rather, in the past 1 year. But globally, I don't think there's we can write at this point. I don't think it's time has come we can just write off crypto. No, but certainly the challenge will be for the crypto exchanges and the entire industry, how to move ahead and how to have a sustainable growth. So it's a setback for the industry.
Though the cryptocurrency values went slightly down after the Binance trouble, it recovered in the next 48 hours.
There was some 3, 4, 5% of drop of the cryptocurrency prices on that particular moment within the next couple of hours itself. But most of it already got recovered within the 48 hours since the issue has happened. So overall, I would like to say there is some knee-jerk reaction, but definitely not as much as everyone thought the importance of Binance would be. So why the reaction is not so high is because I think the market has continued to mature over last few years, and these things are not letting the impact to be really be taken deeply.
RBI Governor Shaktikanta Das's stand is very clear in cryptocurrency. During the Business Standard BFSI meet held this year in October, Das again reasserted his views that there was no underlying value to it and it must be regulated.
On cryptocurrency, I would like to say, and I would like to say it with all seriousness, that it's a very serious issue. It's a very serious threat to financial stability for all countries, for global financial stability, especially for emerging market economies. And that is something which has been recognized in the IMF FSB synthesis paper also. And incidentally, the IMF FSB synthesis paper also says very clearly that based on country-specific requirements, especially emerging market and developing economies may depending on country-specific situations, may impose additional restrictions with regard to cryptocurrencies.
The IMF FSB synthesis paper has identified the risks that are related to cryptocurrencies. The paper identifies that the widespread adoption of crypto assets could threaten the effectiveness of monetary policy and can increase the fiscal risks. The fast cross-border crypto transaction will affect the tax revenue collections and the compliance. And if it is given legal tender status, the government will be exposed to exchange rate risks. The paper suggests that the crypto assets can pose significant regulatory, legal, and enforcement challenges. The IMF FSB synthesis paper provides some policy recommendations, such as introducing an unambiguous tax treatment for crypto assets and modernizing private law to classify crypto transactions. Even though India hasn't specifically come up with a stance on the legality of cryptocurrencies, the 2022 budget clarified that crypto assets will be classified under the virtual digital assets, and the gains earned from trading crypto assets will be taxed at a rate of 30% and 4% cess from 1st April 2022. Additionally, it will also attract 1% tax deducted at source if the crypto asset is valued more than 50,000. The experts pointed out that the regulatory scrutinies and regulations will help the crypto industry to clear the bad air and skepticism around it.
Whether creating regulations will kind of end the industry, I definitely don't think so. It will just make the trust among the people and among the entities and businesses and communities stronger. And everyone will understand what can be done, what cannot be done. So today there are so many questions in the crypto industry as the industry is evolving, where if you want to do something similar in India, whether it is correct or not, right? So there is a lot of unknowns. I think these kinds of regulations will only clear that particular space, they clear that air, and they will facilitate new innovations in the country.
In 2021, market capitalization of cryptocurrencies grew threefold, and in May 2022, the total market value shrank from a peak of $2.6 trillion to below $1 trillion. The market capitalization of the crypto market on 28th November stands at $1.46 trillion. In the last few months, cryptocurrencies have shown less volatility, and experts have referred to this as a sign of reaching maturity. Also, according to experts, the increased scrutiny will give setbacks to the industry in the short term, but in the longer run, it will help crypto market clear the confusion around the do's and don'ts.
Despite its booms and busts, crypto still holds sway, and young investors swear by it. The only other medium which offers them somewhat similar thrills is IPL, and one of the leading IPL stars, Hardik Pandya, is back into the fold of Mumbai Indians. In our special segment today, Kasturi Akhil and Tariq Ahmed find out what makes Hardik Pandya so important. Yes, Hardik Pandya is indeed returning to Mumbai Indians, his home franchise. The Maverick all-rounder stint at Gujarat Titans came to an end earlier this week. The switch happened as part of a tripartite all-cash deal trade-off with Gujarat Titans, reportedly for 15 crore rupees. Typically, the Indian Premier League follows two types of player trades. Hardik Pandya moving to Mumbai Indians exemplifies a one-way trade, wherein a franchise buys one or more players from another IPL team. A two-way trade, on the other hand, involves swapping players between two teams. Both the cases require the players' consent. As part of the trade deal, the team that is releasing the player is entitled to a mutually decided transfer fee from the team acquiring the player. The player also shares a certain percentage of the transfer fee. In Hardik Pandya's case, the amount has not been disclosed to the public. Each team is allotted a budget of 100 crore rupees with an additional increase in the purse by 5 crore rupees for the 2024 IPL auction in Dubai. After releasing 10 players, including English pacer Jofra Archer, Mumbai Indians was left with just 15.25 crore rupees. So to get Hardik Pandya on board, Mumbai Indians traded Australian all-rounder Cameron Green to Royal Challengers, freeing up 17.5 crore rupees. But why would they let go of such important international players to get Hardik back into their squad?
It's not only for his skill with the bat and maybe a little bit with the ball, but it really is about leadership. And Mumbai Indians, if you really look at it, builds its leadership around captains, time tested captains. And I think they have a terrific captain at this point of time. And two teams, particularly Mumbai Indians and Chennai Super Kings, have typically followed that format. I think Hardik Pandya getting in is building future leadership of Mumbai Indians for sure. Mumbai Indians builds with strategy, and this strategy seems to be medium-term strategy.
Mumbai Indians is the most decorated team in the IPL history after Chennai Super Kings. Mumbai has played 6 finals and won 5, and Chennai has played 10 finals and won 5 of them. Both Mumbai Indians and Chennai Super Kings have retained their captains and key players for a longer period. Right from the first season, Mahendra Singh Dhoni captained Chennai Super Kings and built a squad of familiar players like Ravindra Jadeja, Ravichandra Ashwin, Dwayne Bravo and Ambati Rayudu to have the most successful run in IPL history. Mumbai Indians too, after Sachin's captaincy and a brief leadership campaign of Ricky Ponting, had Rohit Sharma at the helm for the past 11 seasons with 5 winning titles to their credit. During his long stint as a captain, Rohit Sharma also built a reliable squad around him with players like Jasprit Bumrah, Hardik Pandya and Kieron Pollard. But on the other hand, Punjab Kings, formerly known as Kings 11 Punjab, and Delhi Capitals, former Delhi Daredevils, didn't have captains and a familiar squad for a long period, and they are one of the least successful teams in the IPL's history.
IPL, particularly a successful IPL team, needs to be about leadership. Leadership which is strong, leadership which has been around for a while, leadership which is quite time tested, and leadership which doesn't move every season. So I think Mumbai Indians has thought that out well, and I think Hardik Pandya coming in means defining and beefing up the leadership stakes of Mumbai Indians. A team must not only have a captain, it must have a very solid vice captain. A team must not only have a leader, but must have a leader, another leader who can actually step in and fill the gap if there exists a gap.
Experts have pointed out Hardik Pandya's successful captaincy at Gujarat Titans and his familiarity with the squad have made him important for Mumbai Indians. He won the first season at Gujarat Titans and led them to the final in the next. As an all-rounder, he can perform with both bat and ball, and he has been an exceptional fielder too. Moreover, Rohit Sharma being 36 years old, experts say that Mumbai Indians might be seeing their future captain in Hardik Pandya, justifying the high-profile trade worth 15 crores.
If you look at Mumbai Indians, they are the only franchise which has got the largest number of cap players who are playing in the T20 India team today, or rather the international team today. And Ishan Kishan, Surya Kumar Yadav, Rohit Sharma, Bumrah, and Hardik Pandya coming back into the team just adds to the entire franchise value of a large portion of the Indian team, or rather the current Indian team, being under their franchise KTs. That's a very big positive boost, I would say, in terms of brand value and in terms of the performance of this franchise.
Hardik Pandya debuted his IPL career with Mumbai Indians, and now that he is back, it not only augments Mumbai Indians' brand value, but also adds another feather to Pandya's hat as the team's blue-eyed boy. Well, we already know how important cricket is in India, given that the just concluded Cricket World Cup broke all the viewership and advertisement records. Moving on, FADA reported that the automobile retail sales also broke all the previous records. Overall, automobile sales rose 19% in the 42-day festive period this year as compared with last year. At the bourses, the Nifty Auto Index has significantly outperformed the markets by zooming 35% thus far in 2023. As analysts see moderation in demand, will the rally in auto stocks come to a halt? Nikita Vashish finds out in our next report.
The calendar year 2023 has been incredibly rewarding for automobile companies and their investors. For instance, the recently concluded festive season saw record sales of 3.8 million units during the 42-day period, which is a 19% growth compared to the same period last fiscal year. Among individual categories, two-wheelers saw a growth of 21% year-on-year, while sales of passenger vehicles surged 10% according to data provided by the Federation of Automobile Dealers Associations. Earlier in October, passenger vehicle wholesale numbers touched an all-time high of 390,000 units, registering a year-on-year increase of nearly 16%. The numbers have revved up auto stocks at the bourses, and the Nifty Auto Index has leapt 35% thus far in 2023. Individually, Tata Motors zoomed 74%, TVS Motor and Bajaj Auto over 60% each, and Maruti Suzuki 25%. By comparison, the Nifty 50 index has grown by 9% during the period. However, as the overall retail sales dipped marginally last month due to a slump in the two-wheeler space, analysts expect the growth rate in PVs to slow down too.
The PV segment reported record sales in October 2023 amidst robust demand, easing supply chain issues and inventory buildup in anticipation of strong retails during the festive season. From here on, we believe the growth in PV sales will moderate due to high base. PVs continue to have waiting period though reduced, and OEMs are not offering any discounts to push sales at this point of time, except for the calendar year end discounts.
According to Motilal Oswal Financial Services, there are signs of slowdown in the lower-end PV segment along with the declining waiting period for SUVs. Does this mean the rally in the auto stocks may come to a halt?
We believe with wholesale surpassing retail sales significantly until October, there is a high likelihood of inventory correction commencing from November in this sector, resulting in lower wholesales month on month. However, we foresee a moderation in the PV growth rate in FY24 following a robust 27% year-on-year growth in FY23. Our positive outlook for the sector persists as demand drivers remain steady, followed by margin expansion. Nevertheless, considering the recent surge in stock prices, valuations are not particularly attractive.
Analysts thus suggest booking profit into auto stocks in the near term and buying them on dips to reap long-term benefits of capacity addition, superior product mix, and ease in semiconductor issues. Today, on 29th November, investors will track the second estimates for the US Q3 GDP growth data.
He's making plans for an early retirement. Business Standard.
Unlike the markets, most cryptocurrencies were trading in red on Tuesday. Meanwhile, the world's largest cryptocurrency exchange, Binance, is in the news. Its former CEO has pleaded guilty for violating US laws. But what are cryptocurrency exchanges? We tell you in our Explainer segment.
Before looking into cryptocurrency, we should learn what fiat currency is. Fiat money is a type of currency that has no intrinsic value and is not backed by a physical commodity, such as gold or silver. The currency is accepted as a means of payment based on its stability and creditworthiness of the issuing government. The Indian rupee, US dollar, and euro, among others, are examples of fiat currency. Cryptocurrency is a digital currency. Its transactions are verified and maintained using cryptography. This allows transactions in the digital currency to be anonymous and secure. Parties involved in cryptocurrency transactions do not need to know anything about each other, nor rely on third-party intermediaries to complete transactions. According to the United Kingdom's Financial Conduct Authority, as of the beginning of 2023, there may be well over 20,000 cryptocurrencies. The crypto market is also expected to reach 4.94 billion by 2030. Cryptocurrency exchanges facilitate various trading options, including margin and lending trading, as well as futures and options trading. These platforms are accessible through mobile apps or desktop functions. They allow users to buy and sell assets like Bitcoin, Ethereum, and Tether, accompanied by a range of trading and investing tools. Earlier, obtaining crypto was limited to mining or online forums. However, now, numerous global exchanges operate with diverse security levels and fee structures. The biggest challenge to cryptocurrency is its susceptibility to hacks and cyber theft. Users also have limited control over private keys in many exchanges. There are three types of crypto exchanges: centralized, decentralized, and hybrid exchanges that serve as intermediaries connecting buyers and sellers in the digital realm. Centralized exchanges work similarly to conventional stock exchanges. They are regulated by a single authority that looks after every account and transaction. Coinbase and Binance are both centralized exchanges. Most exchanges in India, including Mudrex, CoinDCX, and CoinSwitch, are also centralized. Decentralized exchanges are completely autonomous and allow users complete control of their funds without any oversight. It is a peer-to-peer marketplace with direct transactions occurring between traders. They are more secure and private than central exchange. A potential drawback is that these exchanges have lower liquidity than centralized exchanges. Cryptocurrency wallets are used to send, receive, and store cryptocurrency, as opposed to exchanges which primarily function to facilitate trades. A wallet can be used to store any cryptocurrency that can be held in a wallet and can exist on exchanges both offline and online. Wallets also generally utilize private keys, whereas exchanges may or may not have private keys.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Coinbase CEO Brian Armstrong believes that the US government's action against Binance will allow the crypto industry to turn the page. He believes that this particular development will bring regulatory clarity on crypto. Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.